All right, welcome back to the channel. We got a stock market update, and it was a bloody week again. Once again in the market, red week. And we had some big earnings coming out this past week. We had Microsoft, we had Google, Amazon, Facebook, and to me these numbers were really good. So I've got Microsoft pulled up here. Let me, try and move myself out of the way if I can. So I like these infographics that kind of put things, all the earnings into one little snapshot here. So you can see on the left side here what Microsoft, the types of businesses they have, and then again how much revenue is coming from each. So most of Microsoft's revenue is coming from the cloud, and they've got a lot of net profit at the end of the day. So after their expenses, taxes, all those things, they got a lot of cash. I want to double check, but I know Microsoft has over 100 billion in cash. So I mean, with rates going up, they got 100 billion in cash, and they're making 5% on that cash. So I mean, that's another revenue stream for them. And if they need more money, they can sell bonds at 3-4%. So basically what I'm trying to say is these big tech companies are still in pretty good shape. Here's Google. Most of their money's coming from ads on search, and YouTube doing really well. They did miss on their cloud, still 8.4 billion, but the market was expecting a little bit stronger numbers, and they ended up with 19, almost 20 billion in profit. We got Amazon. Amazon brought in 143 billion in revenue. They touch a lot of money. Slim profit, only 10 billion, but right now, Amazon, they're not trying to be uber profitable. They're focusing on growth, and that's how they're able to get 143 billion in just 3 months. So that's pretty good. And again, I thought their numbers were great. And Amazon was the only one that went up after earnings. Meta here, again, all ad revenue, 13 or 12 billion in profit. So again, they're doing good. They are spending still a lot on the metaverse. They got another 9 billion spent on R&D this past quarter. But to me, what was really interesting was that these stocks didn't hold their gains, and they got sold off. So, for example, Microsoft, you saw it pop on earnings, boom, and then the market said no, selling off. Same thing with Facebook, just sold off, and Google, really, huge drop. So, that's no surprise at why the whole market's down, because those big tech stocks have been the big drivers of this whole market run that we've had all year. There's a lot of beat up stocks besides the big tech, and now we're seeing the big tech start to get beat up. The real question is, for how long? So who knows? Nobody knows. But again, the longer rates stay high, the more pain in the market. So we're seeing stocks get re-rated. We're seeing people say, you know what, I'm going to sell. I think there was $1.2 trillion that has been pulled out of big tech this past week. So investors saying, I'm going to sell some big tech. Maybe I bought Facebook at 100 and now it's 300. Let me take that off the table and let me go put that money into a money market fund and get 5% and just wait around for a little bit, see what happens. So not a bad idea. So, what's going on is completely rational. It's just the question is how much more. Because we're seeing phenomenal earnings in the market saying, I don't care. I don't want to own you. And those are the best stocks. So you can imagine what happened to an ENPH, right? So they reported their earnings. Gosh, sorry about that. They reported their earnings and boom, sold off even more. So, for the market to want to hold on to you, you got to really put up some good numbers. And coming up this week, another big week, we've got Apple We've got Coinbase, we've got PayPal, Airbnb, AMD, McDonald's, Caterpillar. These are some big brands, Starbucks. So we'll see how these companies are doing, and we'll see how the market is going to react to them. So who knows? Because we've seen if you have good earnings, still might not be good enough. So we've also got the Fed meeting this week on Wednesday. It's I think it's 99% probability that they will not raise rates. But again, it's interesting to see what he's going to say. I'm sure he's going to say the same thing he said all year. We're here to fight inflation. We're going to keep our policy restrictive until we have won the war against inflation. And that'll cause a period of below economic growth. I mean, I could put the suit on and do the speech for him. And then we've got some jobs data also on Friday. And then Wednesday also the job openings. So it'll be interesting to see, but the big dog Apple is reporting on Thursday, so that's going to be very interesting. And there's a couple others, Coinbase, Palantir, Shopify, PayPal, Airbnb. Those are stocks I'm interested in and interested to see how they're doing. So we'll just have to wait and see. This past week, I did dollar cost average into some SMH. This chart's looking pretty ugly. If we break this, I was concerned if we break 140, there's a lot of room to drop down here. So we'll see if we continue to fall. Looks pretty likely that we will. But in the case that we don't, we rebound, we shoot back up, whatever. I did dollar cost average a little bit, but I'm still holding a decent amount of cash to see what happens in the market. And especially right now, you're getting rewarded to hold cash. You're getting 5%. But if you do see a deal that pops up for you, it's not a bad idea to take advantage. I just would recommend going all in. Keep some dry powder because you never know what's going to happen. As far as Tesla, I still have not bought any shares. I've been selling puts on Tesla. And I sold the 200 put and I closed that out for $200 profit. And then I turned around and I sold the 185 put. And this is what I'm currently holding on here. So we'll see if Tesla stays above 185. I get to keep that $360. And we only have about 20 days left until that. So on this deal, the way I do options, if I get 50% profit, I'll close it out and move to the next option. So that's what I did with the last put. I got 50% profit, moved on. So I think I'm around 10 to 15% profit here. So when I do get more in the money, I will close that out and roll to another option. The end phase put, I did lose $100 on because it gapped down so much on earnings. So I closed that one out. Fortunately, I did have a put on Amazon and Amazon bounced up. So those were a wash. I did not get assigned on Amazon. Amazon popped up here, but it wouldn't surprise me if maybe we bounce up to the 135 or so and then get sold off. So who knows? Nobody knows. But it does look like shorter term trend Amazon is in a little bit of a downtrend. But again, their earnings were great. Earnings call was good. I really like what Amazon's doing long term. So that's definitely one I'm not selling. I just may not be accumulating it right here, right now, because I did buy quite a bit back in here. So I'm kind of tapped out on Amazon for now, unless we get under 120, maybe 115. That's the plan. I'm really interested on AMD. 85 is, to me, a great entry price. We'll see what they say on their earnings. But I think this is going to be a good company that competes with NVIDIA. NVIDIA is another one I'm taking a nice look at. We're at 400. This one's kind of scary because it looks like if we fall we break down below 400, we got a long way to go because it made a huge move really quick. It's crazy to think NVIDIA was $115 1 year ago, and it's 400. So we'll see what goes on there. Other than that, big week, Apple. Let's take a look at Apple real quick. I got to have Apple on here somewhere. So Apple, I wouldn't be surprised if Apple gets bought up. I'm sure Warren Buffett's looking around saying, might as well buy the dip. But, you know, to me, I really like Apple in the 150s. That's when I get interested. I like the company. I don't think it's some huge growth company. I like what they're doing with services. I have an iPhone, but other than that, I'm other brands when it comes to electronics. So we'll see what they say on earnings. But that is going to be the market update for this week. There's going to be lots of volatility still. But real quick on the S&P, I wouldn't be surprised if we get a little bit of a relief rally these next couple days. Maybe we come back up a handful of percent. So that's what I'm looking for. But again, we're in a clear downtrend here, and until we break out of this downtrend and move up, that's fine. Downtrend is great because I want to buy stocks and I want to buy them when they're cheap, not when they're running away from me going higher and higher and higher. So this is good, but again, with the economic conditions, I don't see rates getting adjusted anytime soon, and if they do, it's because something really bad happens. So I wouldn't be surprised if there's continued pressure on stocks. So now is the time to be patient, be methodically buying stocks at good prices, and don't be in a hurry. There's no rush right now. So that's my message to you guys. It's a great time to sell some puts at prices that you're okay getting assigned at to collect some income. And if you do get a big pop in a stock, it may not be a bad idea to sell some calls. For example, when Tesla has a nice green week, I'll be looking to sell some calls against my position. Maybe even Amazon, I'll take a look at that. Just to hedge my position for when there could be more downside. When I do that, I'll let you know. But that's all I got for you guys this week. Peace out, and go Hawks, baby.